Hey guys, welcome back to the Bitcoin Fortress podcast. This is episode 191. Today is November 23rd, 2025. We are at block height 924878. Moscow time 1153 sats per dollar, and on-chain fees are comfy 2 and 2 sats per V-byte for low, medium, high. Well, folks, we're in a deep and nasty drawdown. So, this week's episode is all about how bad the sell off really is, what ETF flows and miners are telling us, how policy is shifting with the Bitcoin for America Act and the US Strategic Bitcoin Reserve. And we'll cap it all off with our featured Bitcoin Fortress Substack post on quantum threat and BIP 360. So, with that, let's jump in. So, first, let's frame the week. Since mid October's all time high around 126,000, Bitcoin has completely erased its year to date gains and is now down roughly 30% from the top. Bloomberg notes that this is shaping up to be Bitcoin's worst month since the 2022 Terra FTX meltdown. Now, that is amazing because we are certainly not in that environment anymore. So, shocker, spot price traded as low as 80 to 82,000 range this week, a 7-month low, with about 1.2 trillion wiped from crypto markets since October 7th, according to Reuters and others. On top of that, we've got a technical death cross on the daily chart, 50-day moving average crossing below the 200-day, which mainstream finance is leaning on as proof that the bull is dead. Bitcoin is dead again for the 400th time. Sentiment is ugly. CoinDesk reports 1.7 billion in long liquidations, and the crypto fear and greed index is back in extreme fear territory around 11, the lowest since late 2022. But there are also signals of capitulation and bottoming, derivatives curves in backwardation, hash price at multi-year lows, miners dumping reserves, and even ETF flows showing signs of turning. So, this episode is really hodling through the stress test. Let's jump into the news. First up, price action, market structure, and sentiment. Bloomberg and Reuters both highlight that Bitcoin has now given back all of its 2025 gains, down 23 to 30% in November alone, on track for the worst month since June of 2022. And of course, this is what a post all-time high shakeout looks like in a 4-year cycle: violent, fast, and terrifying, but not unusual in historical context. In fact, I've seen some posts about historical drawdowns during bull markets, and 20 to 30% pullbacks are not unusual. Um, in fact, deeper pullbacks were more common earlier, and more of them in earlier cycles. So, uh, for now, perfectly normal. Reuters also reported that Bitcoin fell as low as $80,553 per coin, and they frame it as part of a broad flight from risk alongside frothy tech stocks and uncertainty over the timing of Fed cuts. Axios estimates nearly 400 billion in crypto market cap was wiped out in the last week alone, while CBS notes that since the October top, Bitcoin's drop has vaporized about $800 billion in value. Couple comments here. First of all, mainstream media really has some great coverage when Bitcoin's price is crashing. Hats off to them. Also, it's interesting when the price drops, then there's a search for a narrative. And perhaps the simplest narrative is just there's more sellers than buyers. I don't know. Yahoo Finance and BitGet both pick up on the death cross that printed around November 16th as Bitcoin tumbled below 94,000 and then below 90,000. So again, let's contrast this with prior cycles where death crosses often printed after the bulk of a drawdown and sometimes near local bottoms rather than tops. So again, technical analysis, always fun to do. Bitcoin is going to do what Bitcoin is going to do, like I always say. Stay humble, stack sats, dollar cost average, and if you're buying now in your weekly buys or bi-weekly buys or whatever you're doing, daily, monthly, you're getting some cheap sats. Should be happy. CoinDesk points out that the current correction is about 30% off the all-time high and about 43 days in, which looks very similar to the April 2025 correction that took Bitcoin from 109K to 76K over 80 days. Remember that? The tariff tantrum. Good moment here for us to talk about rhyming cycles. Corrections of 25 to 35%, again, as I mentioned earlier, are normal within a bigger secular uptrend. Whether this is simply just a drawdown in the bull market or whether it's the beginning of the bear market, uh, cheap sats. Satoshi put Bitcoin on sale, 30% off for Black Friday. Go get you some. CoinDesk notes that futures basis flipped into backwardation and the 3-month annualized basis dropped to 4%, signaling serious derivatives market stress. Historically, similar structures in November 22, March of 2023, and August 2023 lined up with major or local bottoms. Another CoinDesk piece tallies about 1.7 billion in leveraged long liquidations as Bitcoin rushed toward 80K with fear and greed hitting 11. What is it? That was it Warren Buffett or Charlie Munger? Can't remember. Be greedy when others are fearful. Be fearful when others are greedy. Crypto News and others run Why is Crypto Down Today? Explainers. And of course, this is the attempt to try to put a narrative on all this. Higher rates, risk off shift, ETF outflows, and overly leveraged positioning are all getting the blame. Tying it all together, this is really a classic leverage cleanse and a macro risk off rather than some kind of fundamental failure of Bitcoin. Although there's plenty of people with that FUD out there as well. The network is working, blocks are ticking, hash is high, and it's the fiat side that is panicking. Moving on to ETFs, institutions, and corporate Bitcoin. CoinDesk tracks record net outflows from US spot BTC ETFs in November, about 3.79 billion so far, the worst month since launch. So again, our friends in the ETFs are not our friends. They are buyers when number go up, and they are sellers when number go down. And I've talked about this before. And of course, you can own an ETF if you want, but it's better to own Bitcoin in cold storage. Reuters reports BlackRock's IBIT alone saw a record $523 million single-day outflow on November 19th. Morningstar echoes the theme that crypto ETF investors are on track for record monthly redemptions as Bitcoin slid below 90,000. Farside's flow table shows a string of deep red days mid-month, especially around November 17th and 18th. Then the tone shifts. CoinPaper reports that on November 22nd, spot Bitcoin ETFs saw 238 million of net inflows, led by Fidelity's FBTC with 108 million, breaking the weeks-long outflow streak. Yahoo Finance also notes a smaller earlier bounce with 75 million in net inflows after a 5-day outflow streak broke on the 19th. So the weak hand ETF money is puking out at the bottom, and the strong hand buyers are quietly stepping in. This is how it has been, and this is how it will continue. A piece from Barron's on strategy, formerly MicroStrategy. Stock is down over 50% from recent highs as Bitcoin drops 30%. Common shares are getting hammered, but the preferred stock issues now yield 10 to 15%, which is attracting income investors willing to take Bitcoin price risk. And of course, at these levels, it's probably not that much of a risk. It's certainly less of a risk at 85 than it is at 125. Yahoo Finance highlights Strategy's $55 billion Bitcoin bet and delisting concerns despite equity volatility. Saylor says the company is undeterred and views the sell off as noise. Another piece walks through what happens to strategy if Bitcoin falls under key levels, given its 649,870 Bitcoin stack with an average cost of $66,000 and sizable convertible debt stack. Coin Republic notes strategy recently executed an 835 million Bitcoin purchase, one of its largest since 2024, even as corporate Bitcoin accumulation more broadly has slowed. FinViz news coverage shows strategy lining up another $620 million capital injection with eyes on more Bitcoin. So Saylor is continuing to buy and hodl. Motley Fool wraps it up. Strategy shares fell about 14 to 15% this week as the market reprices its leveraged Bitcoin exposure. So the ETF tourists are out. The fanatic treasury players are doubling down. If you're bull case long term, this is exactly what you'd expect. Bitcoin migrates from levered speculators, the weak hands, to the long duration holders, the strong hands. And by the way, if your Bitcoin is sitting nicely in cold storage, turn off the news, put down your phone, go outside, touch grass, relax. It's going to be fine. Moving on, mining, hash rate, energy, and AI. CoinDesk reports hash price dropped to about $38.2 per petahash per second per day, the lowest in over 5 years, with difficulty and hash rate near all-time highs, but price back near 90K, well, now in the 80s. Mining stocks are bleeding, partly because investor enthusiasm has rotated towards AI infrastructure. Yahoo Finance notes miners have dumped over 30,000 Bitcoin in just 48 hours, pushing miner reserves to a record low as they scramble for liquidity. Now, again, the miners are typically your natural sellers in the Bitcoin ecosystem. Of course, there are a lot of whale sellers creating a lot of supply currently, which was driving the price down. So this just kind of adds to the mayhem. Again, this is classic capitulation behavior. Historically, big minor distribution tends to cluster near cycle lows, not highs. So again, local bottom, we'll see. CoinDesk ran a feel-good story. A solo hobbyist miner with a single rig solved a block on November 18th, netting around $265,000 in rewards and fees at current prices. A nice reminder that home mining still matters for decentralization, and yes, you really can find a block. So go get yourself a home miner, get a BitAxe. Forbes covers how several African nations are leaning into hydropower and stranded renewables for Bitcoin mining, but also raises concerns about, quote, hash rate exfiltration, where foreign capital controls the infrastructure and value flows offshore. Reuters and other coverage out of Malaysia describes a long running problem of power theft by illegal miners, with utilities losing hundreds of millions in stolen electricity and ramping up enforcement and inspections. Tech Radar reports on Bitfarms rebranding part of its business to focus on AI data center hosting, leveraging cheap power and infrastructure built for minings. Investors Business Daily highlights Cipher Mining's deal with FluidStack and Google to host high performance computing workloads, again turning Bitcoin era infrastructure into AI era cash flow, a continuing theme. And the PR Newswire reports Bitmine Immersion, ticker symbol BMNR, posts $328 million in net income, earnings per share of $13.39, and declares a small 1 cent per share annual dividend, marketing itself as the first large cap crypto company paying a regular dividend. So, to wrap it up, hash prices in the gutter. Miners are selling. Some are pivoting to AI, and yet we see record global hash rate and viable public miners. That's the security budget doing its job. And of course, as long as Bitcoin stays decentralized and secure, we are happy to own it. Moving on to policy, regulation, and the nation state game. So, what's new here? The U.S. Office of the Comptroller of the Currency issued an interpretive letter confirming that national banks can safely custody crypto assets if it's incidental and tied to providing services like paying network fees on behalf of customers. It's incremental, but continues the trend of crypto as ordinary banking business in the U.S. The International Consortium of Investigative Journalists published a global explainer. Crypto is mostly legal in 45 nations, partially banned in 20, and largely banned in 10, with four broad regulatory regimes emerging. This is useful background as we watch nation states decide whether to compete for Bitcoin capital or try to fence it out. Game theory is working. Next up, Brookings published a piece by former CFTC chair Tim Massad arguing for merging the SEC and CFTC is the best way to regulate digital assets instead of patchy market structure bills. Law firms like Paul Hastings and Latham and Watkins are tracking how Congress is inching forward on market structure, ETPs, staking, and the Howey test, plus the new Trump era strategic Bitcoin reserve executive order. And speaking of that, Representative Warren Davidson introduced the Bitcoin for America Act, which allows federal tax payments in Bitcoin without triggering capital gains and directing BTC tax receipts into the proposed U.S. Strategic Bitcoin Reserve. Now, I'm not sure how I feel about this, but I mean, if you're going to pay your taxes and you don't have a lot of fiat, then that certainly makes some sense, but I'd rather keep my Bitcoin and borrow or use fiat to pay the taxes. That's just my personal opinion. This sits on top of Trump's March 2025 executive order to create a strategic Bitcoin reserve and digital asset stockpile funded with government held and forfeited Bitcoin, about 198,000 Bitcoin as of mid 2025. So, again, this is nation state hodling, turning seized Bitcoin into strategic reserves rather than dumping it on the market. So, is the US government diamond hands now? Uh, Wait and see. Maybe the new administration takes a different view. We just switch them out every 4 years. Moving on to adoption, sovereign Bitcoin, and events, we have El Salvador's Bitcoin Histórico and Economía Bitcoin 2025. So, El Salvador's National Bitcoin Office hosted Bitcoin Histórico, November 12th and 13th, a 2-day conference around San Salvador's historic district celebrating Bitcoin, financial freedom, and the country's transformation. Another event, Economia Bitcoin 2025, is running November 22nd to 23rd at Eco Park Berlin in Usulután, focused on circular economies and entrepreneurs building the region's first full Bitcoin economy. A recent piece in Bitcoin Magazine titled El Salvador, the Making of a Sovereign Nation links these conferences to the ongoing grassroots circular economy experiment in places like Bitcoin Beach. Okay, next up, here are some of the big themes running through the Bitcoin podcast universe this week. And let's see the first one here: liquidity, gold, and macro cycles. So, what Bitcoin did had an episode, Bitcoin, Gold, and the Coming Liquidity Pivot, with Lynn Alden, that came out on November 18th. Lynn breaks down how fiscal dominance, global liquidity, and shifting investor composition are driving both Bitcoin and gold. She argues that stagnation isn't a failed halving thesis, but a reflection of macro headwinds, and that a modest Fed balance sheet pivot could flip the script. And so if you tie that to the stress we now see with high real yields and risk off is bad for everything with duration, including Bitcoin, it doesn't change the long-term monetary thesis, or as Lynn likes to say, there's no stopping this train. Next theme, Bitcoin spam, mempool policy, and relay wars. So we are still talking about that. Stefan Livera, in his episode SLP 703, Bitcoin spam, a Libre relay view with proof of cash, which came out on November 18th. Kevin Kai walks through the Bitcoin spam debate, what even counts as spam, who gets to decide, and how node policy can drift towards soft censorship if we're not careful. Libre Relay's stance is relay all consensus valid transactions and don't let policy morph into de facto consensus rules. This dovetails nicely with higher fee volatility and quantum conversations. Protocol changes are slow and contentious. Mempool rules are where the soft power lives. Next theme is bear market psychology and conviction, which it's a good time for that. This could just be a correction within the bull market before the blow off top and then the crash, or we could be at the beginning of the next bear market until the next halving. Either way, it's good to have your mindset correct. So, Bitcoin Audible has several recent episodes that hit on this, like uh, thank you for being annoying and short 25 pieces on time and regret, using philosophy to stay level-headed through volatility. Crypto 101 ran an episode titled Crypto Rundown. Is this the end for crypto? No, and here's why, on November 22nd, leaning into the doom headlines and explaining why the structural story hasn't changed. And again, stay stack consistently, zoom out, and don't let fiat volatility hijack your brain. And then the final theme is policy activism and the Bitcoin for America moment. TFTC Tales from the Crypt recently had an episode, Why Bitcoin Policy Activism Matters Now, with Kyle Olney, underlining how critical it is for Bitcoiners to engage in the political process instead of just complaining on X. I know, I know. You can't vote your way out of this, but if you don't engage politically, you're not going to be able to at least have a chance to influence outcomes. Again, looking back at the Bitcoin for America Act and the Strategic Bitcoin Reserve, this is what policy work looks like when it starts to pay off. Bills on the floor, not just memes. Moving on to our featured Substack post, The Quantum Threat and BIP 360 Future. Uh, This is a good zoom out from this week's carnage to the next existential threat of Bitcoin, which is quantum computing. So, HRF came out with a quantum threat to Bitcoin report. They released this, framing quantum risk not as sci fi, but as a human rights problem. Cryptographically relevant quantum computers, or CRQCs for short, could within 5 to 20 years attack the elliptic curve cryptography, the ECDSA, used in Bitcoin, especially older address formats and any UTXO whose public key has already been revealed. HRF stresses the danger for dissidents, NGOs, and journalists who rely on Bitcoin as censorship resistant money. If quantum breaks ECDSA, early coins and exposed addresses become low hanging fruit for thieves. The report highlights that adversaries can harvest encrypted traffic and exposed public keys today, then decrypt later once they have CRQCs, classic harvest now, decrypt later. But there's a philosophical dilemma. Do we do nothing and let attackers steal vulnerable coins? Or do we burn them via soft fork so they become unspendable, preserving trust in the system at the cost of those holdings? So, my post explores how this isn't just technical, it's about ethics, property rights, and social consensus in a permissionless system. Enter BIP 360. So BIP 360, authored by Hunter Beast, proposes new address types that use post-quantum signature schemes under the label pay to quantum resistant hash. Current drafts focus on NIST-approved algorithms like Falcon, Sphinx Plus, Crystal's dilithium, and on making the transition compatible with hardware security modules and existing wallet infrastructure. The design tension, we want quantum safety without blowing up verification time, block validation, or bandwidth. Some PQ schemes are thousands of times slower to verify, which risks DOS vulnerabilities if naively deployed. A recent Hacker Noon piece calls BIP 360 Bitcoin's quantum Wild West, pointing out that it's both genius and cursed, a big, hairy attempt to pre-decide Bitcoin's PQ future in a landscape that's changing monthly. Discussion on delving Bitcoin suggests narrowing scope, possibly decoupling the address layer from the exact PQ signature algorithms, so we don't lock into a single crypto system prematurely. I underscore that Bitcoin doesn't need to panic now, but it does need a credible roadmap. So I would encourage you all to avoid address reuse and keep coins in modern script types like Taproot, so migration later is easier. And I would also emphasize that post quantum work will likely involve years of research, BIPs, implementations, and social consensus. There's not a quick emergency fork after Q Day. But again, tying it all back to human rights, keeping Bitcoin quantum safe is part of protecting dissidents and ordinary people from future surveillance and confiscation, not just protecting hodler bags. And of course, zooming out even further, there's going to have to be a solution to it because cryptography is kind of underpins everything on the internet today, banking and websites and um, uh, military. Uh, Governments. So there has to be a solution. You can read the full piece in Substack, and I will include a link in the show notes. If you're enjoying these deep dives, I've put a lot of this thinking into my 3 Bitcoin Fortress books, one focused on Bitcoin basics for beginners, one on Bitcoin retirement and estate planning, and one on designing a low time preference Bitcoin lifestyle. You could find them linked below in the show notes and on the Bitcoin Fortress Substack. They're designed to be straightforward, non-technical guides that you can hand to friends, family, or that coworker who keeps asking you if they're too late and just in time for the holidays. And everything is on Amazon in multiple formats. Well, folks, this month hurts. Bitcoin is down, ETFs are bleeding, miners are stressed, but nothing about the protocol has changed. Blocks keep coming every 10 minutes, difficulty keeps adjusting, Hash keeps pointing at the network. We are watching in real time who wants out and who's quietly accumulating from ETFs to nation states to corporate treasuries to folks like you and me. Zooming way out now, we're talking seriously about quantum resistant Bitcoin and national strategic Bitcoin reserves. That is not the language of a failed experiment. That's the language of an asset that has already won a big part of the game. And so, with that, stay humble, stack sats, take care of your family, your health, and your time preference. And I will talk to y'all next week. Bye bye.